House prices just keep rising 7 months in a row now. In September, the national median house price hit over $1.23 million, according to the latest figures from Dr. Andrew Wilson's My Housing Market. But what's driving this growth, and will it last if the Reserve Bank puts further interest rate cuts on hold? As always, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack the latest figures and what they mean for you as a homeowner and a property investor. Hi, Andrew.
Yes, good day, Michael. And as you suggested, house prices, not surprisingly, continue to rise. In fact, the rate of growth is now accelerating. We shouldn't be surprised, as I said, that another interest rate cut in August, of course, just continues to add momentum to what already is shall we say, a frothy environment for buyers and sellers in most capital city markets. So up by 1.1% over the September quarter. That's the national weighted average capital city house price. That's compared to the results over the August quarter.
If I may interrupt for a second, Andrew, for many new viewers and listeners, just want to explain that when you're talking about quarters, My Housing Market uses very statistically smart ways of measuring house prices. So it's not the price over a quarter. You actually have to, if you want to see what's going to happen over the year, multiply that by 12. It's taking 3 months' results over the previous 3 months' results, just so people don't get confused when we use the term quarter.
Yeah, look, what it does is it allows us to take a statistically reliable number of observations, that is 3 months worth of property sales, but rather than looking back 3 months, so, you're sort of not capturing real-time activity in a sense, we compare it to the previous quarter, the previous monthly quarter, which of course was the 3 months to August. So you call it a monthly rolling quarterly model, and it does produce the underlying trends to reveal.
Right. So I interrupted you by saying, boy, it was 1.1% over the September quarter, which again, if we multiply that out by 12, would mean that our housing markets have double-digit growth if that was to persist.
Well, that's right, but it still is it is still a double-digit result, Michael. You're correct. Do multiply that by 12, and it is accelerating compared to what we had over the August quarter. So, and as I said, we shouldn't be surprised. We had an interest rate cut in August, adding to those interest rate cuts in February and May. Of course, we're at the beginning of the spring selling season as well, Michael. We always see more buyers and sellers coming into the market. The spring selling season is all about the focus on the end of year results that buyers and sellers look to engage the market as a result of. So, and we've seen that, with our auction listing numbers rising strongly over the past month. And, the fact that clearance rates are still strong reflects the fact that it's not just a market that is both a buyer and a seller's market, particularly a seller's market with so much competition for property. And when we look at the annual results, which tends to take away a bit of the seasonality issues that we still get month to month, Michael, we can see that the annual results are also accelerating. National weighted average house prices are now up by 7% over the past year, 7.1%, and that continues to rise. And that is now higher than the annual results we had over 2023 and 2024. And I would expect that to continue to rise. Although when we discuss the drivers later, I'm not so sure we have the same prospect of an interest rate cut again through the remainder of the year. But, things can change and data is to come through. But when we look at the local results over the September quarter versus the August quarter, Michael, it's interesting that we could almost call the Darwin housing market a booming market. It was again performer, up by 3.6% over the quarter compared to the previous monthly quarter. And that's a reviving market because Darwin certainly has been in the doldrums for a few years. But the Brisbane market, certainly we can't accused of being in the doldrums any time in recent memory. It was, again, of the major capital cities, the best performer, up by 2.1%. That's house price growth over that monthly quarter. Sydney then was up by 1.4%. Canberra and Adelaide up 1.2%. Perth up 0.8%. Melbourne up 0.3%. Hobart being the underperformer, the only capital city market, Michael, to record declining growth, again down by 0.5%. So Hobart tends to be the constant non-conformer in terms of what's happening in housing markets. we can see how Hobart prices rising in Hobart when others are falling, and now we're seeing the reverse with Hobart prices falling as others are consistently rising. And some good, strong results over the past year for homeowners in Darwin, Brisbane, and Perth, Michael. Darwin up, as I said, a booming market currently in Darwin, up 16.5% over the past 12 months. Brisbane up 11.8% and Perth up 9.9%. So I think the prospects, particularly for Brisbane, are for another double-figure price result.
Yes.
That market, which just keeps on keeping on, and there's some consistency then over recent years. So
well, Brisbane's done 30% according to your statistics over the last 2 years. That's a great performance.
So yeah, it's again strong results, Michael, and we also had strong results again in the unit market. The unit, the median price for units is the weighted average national median unit price over the September quarter compared to the August quarter was up by 0.7%, not quite as strong as houses, and it's still 5.5% higher than the September quarter last year. And that's the 8th consecutive month of higher unit prices as well. And hey, Brisbane was again the top performer to houses of the major capitals, up by 2.3%, the Brisbane market. Adelaide again higher, up by 2.1%. Melbourne units are certainly on the rise, after a period of subdued activity, up by 1.1%. Perth up 1%, Canberra up 0.6%, Sydney up just 0.2%, and Darwin up by 0.1%. Again, Hobart was the outlier, Michael, with unit prices falling by 0.2% over the month. When we look at the annual results, certainly Brisbane, Perth and Adelaide, and again, particularly Brisbane, are recording very strong annual unit price growth. Brisbane up 15.8%, Michael, over the past year so far. Perth up over the past year, that's the 12 months to September versus the 12 months to September. And Perth up 13.9%, Adelaide up 12.3%. But when we look at the 2-year performance, just to show the consistency of these markets, the top performing unit markets, Michael, Brisbane up by 44.5%. So that's nearly a 50% gain over the past year for unit prices in Brisbane. Adelaide up 36% and Perth up 44%.
Over a 2-year period, yeah.
Over a 2-year period. And look, Adelaide and Perth are smaller unit markets, but Brisbane certainly is a substantial unit market by comparison. So it's not just volatility in terms of the prices mix of units coming into the market that's driving this. It's a generalised, strengthening of the Brisbane unit market, Michael. 44.5% over the past 2 years. There's really plenty of momentum in our housing markets at the moment, Michael. We have a strong economy, perhaps just some very, very early signs that labour market cycle is starting to ease, but we certainly wouldn't call it at this stage. We need some more data to come through.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased.
The headline results are very strong still, with a low unemployment rate and a high participation rate. Retail sales are still strong. Of course, buyers and sellers are out in force in housing markets. And look, this is all added to what's a bit more of a problematic environment for the Reserve Bank, which will meet this week for its interest rate decision, which will most likely be an on-hold decision. But we await the Melbourne Cup, the next decision, which will be on Melbourne Cup Day early November. But there was some sobering news on inflation for those that have been looking for a consistent falling of inflation. And we shouldn't be surprised at this, Michael. And we have discussed what happens when the government subsidy ends in terms of the local electricity bill.
Yeah.
And we're seeing the results of that. We had a very big spike in electricity prices, and that sort of follows over August what happened over July. And that's because we don't have the full subsidy that was announced last year for electricity prices. We have a 6-month subsidy still in force, but it is half that of what it was last year. And we are, of course, seeing now a rise in electricity as a result of that, because the actual underlying price of electricity continues to rise. So when we don't have the benefit of the subsidy, we start to feel the effects. And of course, what we're doing with the inflation rate is comparing it to where it was a year ago as to where it is now. So that's likely to continue going forward. And it didn't have an impact on the underlying rate because it was excluded, because it was part of the volatile elements of the underlying measure as it's conducted. So what I'm saying is, even though we've got strong momentum in our housing markets, the underlying forces remain the same: lower interest rates, a strong economy, and an undersupplied housing market, and confidence. And also, with this, momentum we have in prices and buyer and seller activity, we're now going to start to see that fear of missing out, that FOMO type of element, where buyers will start to bring forward demand because they're fearful of having to pay more. And we have a government policy that will introduce tens of thousands of first home buyers into the market as well. So I don't think there's going to be any easing in what is currently strong prices growth generally in our housing markets. And the interest rates are really low enough, as I said, to continue to generate that fear of missing out energy that is always a product of a boom or quasi-booming housing market.
So it really seems that mix that has led our markets to rise for 7 or 8 months now is going to continue at least for the rest of the year. That's good news for those who own properties. It means those who are looking to get into the market are going to have to get off the fence and take advantage of. There's still a window of opportunity. It's not too late. Timing isn't as important as choosing the right asset, whether it's your home to live in the long term or an investment to keep over the long term. The property pessimists have gone to sleep. Winter's over, but they're still hibernating, Andrew.
Yes, well, that's the real cycle, isn't it? But look, in terms of the view from prospective buyers in the marketplace, Michael, look, I think there's the one certainty is that prices will continue to rise. We are in the spring selling season now. So if you're not engaged in the market, the one certainty is that prices will be higher going forward. And we would expect to see particularly the middle and higher price brackets rising as those markets, those sub-markets, particularly the Melbourne market, which is performing very well on this year so far in terms of prices growth, better than it has for the last couple of years for sure. And that will be added to by perhaps the prospect of a revival in the prestige market in Melbourne going forward. And we've got some early signs of that. And the spring selling season is always a positive time for that Melbourne market, particularly the higher price sections. That would just be the icing on the cake for what has been a very positive year this year for the Melbourne market with higher prices.
Well, I know you weekly report the auction clearance results, which are giving us a good in-time indicator of what's going on. Some of these figures are looking back a month now, but we see that every weekend more and more people are going to auctions. Yes. More buyers are missing out every time something sells. There's 3 or 4 people missing. FOMO keeps building. So strong momentum for the rest of the year. Thanks for giving us your monthly update, Andrew.
Thanks, Michael.